You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody, that rockin' tune means it is time to rock out once again with the Option Block, everyone's favorite. At least I hope it's your favorite bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com. As well as, of course, from a little thing we like to call around here, the old Options Insider Network, which you're listening to right now. Of course, you can get it live in your ear holes, this program at least, every Monday and Thursday, noon Central, 1 p.m. Eastern. Other shows scattered throughout the week. You know the schedule is TWIFO, almost immediately after this. Vol Views on Friday, 1 p.m. Central. A lot of other shows smacked in there in between. Advisor's Option, other fun stuff. Boot Camp lurking in there as well. So stay tuned to the website. Go to the website for the live schedule for everything we're doing. Of course, you like it on demand. Just keep listening on your device of choice. If you like what you hear, leave a review on your platform of choice. It always helps new people keep discovering the network. It's been around for well over a decade now, but it's always fun to see the new folks chiming in there. So your reviews, your thoughts, your feedback can help keep that going. And let's see who we got here on the program today. Let's start off. Let's go out. I haven't talked to him in a little bit. He is the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com by way of Carmen Lyon Capital. Mr. Greasy Meatball, welcome back to the program. How was your Thanksgiving, sir?
It was good. No, it was good. You know, we went to Miami and hung out there for a couple days, then came back, and my children had gotten everyone sick. So, we basically had free reign of my in-laws' place. It was not bad. I was, I got to see everything. Got to see Chicago, Detroit, and Miami, and experience a little bit of Thanksgiving at all 3 places.
You know, you're living life. They call it the triangle, right? The Chicago, Detroit, Miami triangle. Everyone loves it. I'm glad to hear your children are doing their job, which is just infecting everyone else. My little guy continues to do that, even though you think you're over it, and then more comes along. So yeah, there's no escaping the miasma that is children. Let's move on here to also welcome once again from parts unknown, Uncle Mike TOSAW, usually from St. Charles. Again, beaming in from an undisclosed location. Uncle Mike, welcome back to the program. Is there anything you can disclose to us today, sir, about your location at all?
Still in North America, but not in Miami. However, after Mark describing it, I can't help but think of the Will Smith song about going to Miami. South Beach, bringing the heat.
Yeah. So speaking of that, I did tell my older son that, I did a radio show with a guy that was on the Bills for a bit, and he was like, "Wow, Dad, you are so cool." It was like literally the coolest thing that he's ever that I've ever done ever, according to my son.
There you go.
And he asked, "Is he a lot bigger than you?" I was like, "You think?" So,
well, I'm very honored. I'm very honored to say the least, and someday I'll have to tell my son that I do the podcast with the greasy meatball.
Yeah, doesn't have quite the same effect.
And he'll be like, "Dad, I'm hungry. Can you get me a meatball sub?" That sounds pretty good. You have to work out maybe a signed Uncle Mike headshot under the old Christmas tree for this season. And last but not least, beaming in, holding down the Fidelity hot seat here this week, he is the Song of Ice and Fire himself, Mr. Colin. Easy for me to say, Mr. Colin Songer from the Active Trader Strategy Desk over there in Fidelity Land. Mr. Song of Ice and Fire, how was your Thanksgiving, sir?
It was good and quiet, which is the way I like it. But now we're trying to dig ourselves out of about a foot and a half of snow. So back to reality.
Foot and a half, that's legit. I was joking with the Rock Laps earlier this week. He said he had an inch. An inch is a rounding error, particular for up there in the hinterlands of Maine. But a foot and a half, that's legit. I doff my cap to you, sir. We don't have that here, thankfully, as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we, surprise, talk about what the heck is trading, what is lighting it up out there these days. Kind of a weird latter portion of the week there. We saw some, interest a couple weeks ago, a lot of optimism about the trade war that seemed to mitigate somewhat, shall we say. Earlier this week, we also have, of course, the lingering concerns over impeachment, the question mark that is OPEC, which we seem to maybe be resolving now. Stay tuned for TWIFO in a little bit. We'll talk about that a lot more. Actually, I have some oil market makers coming on the shows. That should be fun to break down what they're seeing out there in crude land in the wake of all this OPEC madness. So that'll be fun. That kicks off 1:30 p.m. Central, so about an hour and change from now. Stay tuned for that. And, of course, our old friend VIX, a little bit of uncertainty still lingering in the air. So VIX, it was a wee bit higher earlier this week. Now it's kind of hovering at that level. In fact, it's almost exactly unched from where it was on Monday's shows, right around a 1475, which is pretty much exactly where it was on Monday's show. And, of course, I think I forgot to mention all the major indices today coming into the show. They were kind of mixed. They were kind of rallying earlier. Now they're kind of giving that up a little bit here today with S&P once again. Actually playing the laggard today, off about 0.1%. I got NASDAQ and Dow off a little bit more than that, but not quite. Not that much more than 0.1%. So a little bit of downside helping to keep VIX a little bit firm. Since we're talking VIX, Mr. Meatball, you haven't been on a little bit. We'll start with you. I know someone sent me an article by this scrub. You may be familiar with him. I wasn't that familiar with him. He's called the Meatball, and it says something about an outsized move in VIX. So what's this guy talking about here, Mr. Meatball?
Well, I mean, so generally speaking, if you think the VIX is a measure of volatility, which is what the SEBO pitches it as, it's trying to say, all right, here's how much we think we're going to move in the future. Generally, but future movement is generally tied to current movement, right? Like, if a guy is averaging 30 points a night, if I ask you how many points is he going to score tomorrow, if you you're not going to make a guess, plus or minus more than, 5 or 6 points from there. So when the market is moving around, it tends to cause the VIX to go up. Well, last couple of days we saw, we had, believe it or not, we actually had a sell-off on Monday and Tuesday. We gave away a whopping, 50 points? But the move in the VIX was about 11 to over 17. So what we said by that was that the movement in VIX outpaced how much the S&P was actually moving. So the VIX started to predict even greater movement than the S&P was currently producing. That has since backed off and normalized. But yeah, for a period of time there was a lot of fear. We had a lot of people step in and really dig in and hedge. And that's kind of why you get that outperformance. It's saying that, hey, longs, investors are buying a lot of protection here. And that's really what maybe that what we mean by that, and what outpacing means.
It's funny. Just this headline came across my desk. I didn't see anything else of it. And I thought, that sounds a heck of a lot like what we were talking about on the option block earlier this week. I wonder if this person listened to that show. And then I clicked on it and I saw that, it was indeed you. That brought a smile to my face, if nothing else here. So I'll have to subscribe to this, the street trading floor, so I can read the full article for myself. It's over there on the Street Real Money blog over there, listeners. Uncle Mike, sir, it's not exactly an Uncle Mike type day. It hasn't really been an Uncle Mike type week. That's probably why you're beaming in from parts unknown right now, sir. But what, if anything, has been catching your eye out there, sir?
Yeah, I'm just hiding out. No, I think that it's a pullback. The main thing that's happened is that the president said that he doesn't see a trade deal happening until possibly after the election. And so I think that's what's pulled this market back. But once again, like I said a little bit last week, we're still roughly 1.5% away from the all-time highs in this marketplace. So if that's the worst news that we have, that a trade deal may not happen for another year and a half or whatever after the election, and that's what's pulling down the market 1.5%, it's going to take me a little bit more convincing to be a bear in this marketplace. Now, where the opportunity lies in this is one of two spots, to where if you were thinking about selling premium, whether to the upside or the downside, the fact that we've had a volatility move like we've had with not a lot of market movement, there might be some type of an opportunity for you. Now, that obviously depends on what strategy you're using, if you're bullish or bearish, whatever the case may be. But that is something with which that's an opportunity that has presented itself. The other thing that exists with this, I know a lot with a lot of the short premium that I have going in some of my positions, and I'm more long premium right now, but in the short premium sections of a lot of the spreads, I guess is the best way of putting it, the fact that we did get a little bit of a volatility boost didn't help it, but what it does do is that we'll have this vol boost, but theta ultimately beats Vega if you wait till the end. And so if you have December premium that's going to expire in another couple weeks, then this volatility boost, although it didn't help you for the DEES premium, if you have long January, if you have long March, June, whatever, if you have long premium along those lines, but you're short DEES premium, ultimately, if we don't get a ton of movement, this vol boost can ultimately help you going into the following month if you're in more of a calendar or diagonal type of trade. One thing that I'll always tell people is that typically if you are looking to be horizontal or vertical in your trading, meaning doing a calendar spread or a diagonal spread, a lot of times what I like to tell people is or what I look for as well, is to look for a lower volatility environment. Now, what is low? Of course, you have to determine what low is. But if you were in some type of a calendar or a diagonal spread to the put side or the call side, a movement in volatility like this, combined with only roughly a 1% move in the market, can be pretty good for you. Now, with the vol doing what it's doing, the relationship that the vol has to the market, whether it's justified, unjustified, whether it makes sense or not, that's Sebastian's area of expertise. But my point is that higher vol can be a good thing if you can adjust properly to it.
Mike, speaking of areas of expertise, I was going through some old interviews that I did, and I did an interview with BNN, which is Canadian Bloomberg, for those of you that don't know. And in passing, I said, and this was right after that Ray Dalio story had hit about Bridgewater buying puts. And I said in passing, well, if look, like we're trading about 31.15, just a few points south of the all-time high. I said, when you think about it, there's never been a better time to sell stocks. And lo and behold, I look, and the headline for the video is there's never been a better time to sell stocks than this past week.
Love it.
Uh-oh.
I have officially...
I think you owe Uncle Mike some money.
I owe you money. I'm going to give you 100% of the dollars they paid me for that appearance.
Love it. And then if I double that, that'll still be, nothing.
Yes, it'll still be zero. But just thought you'd appreciate that was the piece that they pulled out of a 6.5-minute interview.
You know, when you throw a nugget like that, when you dangle that in front of a financial media, you know they're going to run with that, right? That's like sizzling, juicy steak to them. You should say, by the way, to credit Uncle Mike, and they'll be like, who is this Uncle Mike? And then that'll lead them down a rabbit hole that will get very dark very quickly. Don't do it, listeners. Let's keep on rolling to the Fidelity land, where we could chat up the Song of Ice and Fire here. See what's been cooking. Obviously, been an interesting week, a turbulent week. The Fidelity masses always have some interesting names. I mean, Last Emperor was just talking about some interesting small names, some interesting pockets of liquidity that pop up that the Fidelity legions are slinging out there. Mr. Song of Ice and Fire, what are the Fidelity masses up to today and indeed this week, sir?
Yeah, talking about the Last Emperor, me and him just did a webinar on option synthetics yesterday. So that was it's always a pleasure to work with the Last Emperor.
Good turnout for synthetics.
Today,
the folks get excited about synthetics over there.
We had more than we expected. We were actually thinking small attendance because a little bit more of advanced than what we typically do, but we actually had decent appearance, so I was a little surprised by the numbers.
I find if you put synthetics in the title of anything, it usually spooks away 99% of the audience, right?
Yeah, well, people come out for Diocletian.
Yeah, he's big with the synthetics crowd.
Yeah, he is. They love him. Kirikawa. What, should we call him Kirikawa?
Now you're mixing all the metaphors.
I know.
We're going from the Byzantine East all the way over to the Far East. We won't distract the Song of Ice and Fire any longer, sir. What's going on in the land of Fidelity?
So, as always, we always got a few names that may not be familiar with some people. As a matter of fact, the top spot was Arenia Pharmaceuticals. I had to practice that name a couple times, and I still messed it up. So we had Fidelity customers were placing 55% of the orders were buys, 45% of the orders were sells. Currently, it's trading $15.89. It's up $7.50, which is about 89%. And it's based on a positive drug trial for the lupus-related drug that they have. Currently, created an all-time high. It's above its moving averages. It broke above its upper Bollinger Band, which makes sense, creating a new all-time high. The volume call-to-put ratio is sitting at 1.98 call paper to 1 put, which is actually muted compared to its 90-day average of 2.3 calls to 1 put.
What's with Fidelity and the cheapy biotechs? This is like the third or fourth show in a row where that's been the case. Is there someone talking about these on your platform? Is just the Fidelity masses discover these on their own? It's a definite trend over there.
They know how to sift through and find them. I tell you, it's every time I come on with one of these new companies, I have the head scratcher going. I don't know how they do it, but they got those stock screeners. They're much more sophisticated nowadays, where they can find these opportunities, and they do because they pop up on the screener here. Number 2 spot. So this is a regular. So now we'll get back to a little bit more of a normalcy here with ROKU. So that one right now, 54% of the orders placed are buys, 46% of the orders were sells. ROKU currently is trading at 150.60. Bring that up here. Actually, it's 149.06, which is down $1.52, which is down just under 1% here. The price itself is sitting on its 20-day moving average, but it is above all its moving averages currently. The call-to-put ratio for ROKU is sitting at 2.02 calls to 1 put, compared to its 90-day average of 1.39 calls to 1 put. So a little bit more call activity going on. Now we have to go back to maybe not so familiar as the Sage Therapeutics Incorporated. Maybe that is a common household name. I don't know. But that's currently trading $61.72, which is down $87.48, which is down over 58%. So taking a little bit off the chin here. And this is due to the depression drug that failed its trial. It's below all its moving averages, broke through its lower Bollinger Band. And right now the call-to-put ratio for that one is 2.23 calls to every one put, compared to its 90-day average of 1.48. Now, rounding out the rest of the lineup, Apple in the number 4 spot, batting clean up here, with 55% of the orders being placed by Fidelity customers being buys and 45% being sells. Apple right now is trading $264.47, which is up $2.74, which is just over 1%. Apple did push its way above its 20-day moving average, and now it's currently above all its moving averages. It did, interestingly enough, close the gap that it created 3 trading sessions ago between the third and second session there. So interesting enough, it closed that gap today, which was created on the chart. And this is based on a headline about Apple buys first carbon-free aluminum with the Alcoa Rio Tinto venture. And the call-to-put ratio is sitting at 1.43 call to 1 put, which is above its 90-day average of 1.33 to 1. And lastly, in the final spot is Amazon. Amazon is currently trading 17.44 spot 1.2, which is down 16.57, which is just under 1%. This is on the headlines of the FTC broadens its investigation into covering their cloud computing business as well. The price has pushed below its moving averages. It is still sitting within that Bollinger Band. And the call-to-put ratio, it's 1.6 call to 1 put traded, which is above its 90-day average, which is 1.4 call to 1 put. So that's what the Fidelity customers are trading today.
I like when you guys come on because everyone assumes, Fidelity, it's going to be SPY and Apple, right? And you get some of that in there, but you always have these esoteric names that I'm not familiar with, and B, are trading a ton of paper over there. So it always intrigues me. That's why I like to have different firms on, because you get to see what their clientele is trading, which is often perhaps not what you'd guess at first blush. Let's see what the big players, the rest of the market, the big indices are up to right now. I can mention kind of a fairly quiet day out there. A little bit of action. Depends where you're looking. VIX is not the place to look today. Not a lot going on. About $1.50 on the tape coming into the latter portion of the odd, or excuse me, to say the trading block here. ADV, once again, still shy of that 400K level. SPY out there also struggling to break 1 million out there right now, right about 975 right now. ADV right around 2.5 million out there. S also not really lighting the tape up, about 435,000 contracts on the tape. ADV a little bit north of 1 million out there. The Qs, same deal, about 210,000 contracts on the tape. ADV a little bit shy of 500,000 out there as well. And rounding out the big indices here, the Russell IWM doing 140,000 contracts. The ADV, once again, shy of 300K, about 295. Let's go out to the most actives, see where the action is. Not a ton of action going on out here in the individual equity options out here today. If you want to break into the top 10, it costs you a meager 69,000 contracts. That would get you to Netflix. Widowmaker, not exactly doing a ton of paper today. Number 9, NEO. Our old friend NEO going back out to China there, 71,000. Number 8, DHR, not a name you see in the top 10 very often, or in fact ever. This is Danaher Corp. I'll have to dig into that one, see what's going on. Maybe XDiv, something going on out there. 85. Actually, no, it's not XDiv because the call paper isn't biased enough. It would be all calls if that was the case. So 85,000 contracts going up out there. Number 7, Tesla, $1.02. Now we break into the triple digit, at least on the front end of that spectrum there. The 100,000 plus level there with number 6, Amazon, 105,000. Like we said, kind of a light day. Number 5, Roku, the gift that keeps on giving. Roku, 107,000 contracts. Number 4, AMD, $1.12 on the tape. Number 3, Facebook, 118,000 contracts. Number 2, our old friend Baba coming back again, 211,000. Number 1, you know what I'm going to say. You know it, you love it. Maybe you don't. Either way, it's still up there. It's Apple, 215,000 contracts. Let's look really quickly The most biased paper we're seeing out there today is Facebook. 76% of that 118,000 contracts coming on the call side of the ledger. Since we're talking numbers, we didn't get a chance to get to it on Monday's show when they were hot off the presses. They always put them out like right after the show, so we can't get to them, but we can get to them now. The numbers coming out of the OCC, obviously the Options Clearing Corp. We can see officially how the old options market did for November, and then, spoiler alert, it wasn't a great month. Didn't really light it up. OCC reporting that their cleared contract volume dropped nearly 10%, 9.6% compared to November 2018. Year-to-date ADV for them is about 19.7 million. That's down nearly 5% from 2018. Remember, 2018 was a rock'em sock'em year. We had the big worm turning in October. I don't know how much that translated into November volume or not, but November was clearly more active last year than it was this year. Let's dig into that number a little bit more. Obviously, OCC clears a lot of stuff. Let's dig into the listed options. That's where our interest lies. Listed options volume, 390.6 million contracts. That's down 9.1% from last year, which was right around 430 million last year. Equity options drilling down a little bit farther, 356 million contracts. That's down about 6.8% from last year. That number includes cleared ETF options. If you pull those out, those are about 123.8 million contracts. That's a whopping 30.8% decrease. So no love for ETF options here in November. Drilling down even further, let's get into the index options. A similar tale there as well, I'm afraid, down 28.4% with 32.8 million contracts. That's a whooping, I think, as they say out there. So ETFs and indexes not where the action was in November. Futures also taking a bit of a beating there as well. Remember, the only futures they really clear there are pretty much VIX. There's a couple others really, but it used to be Bitcoin. Bitcoin obviously gone. Cboe delisted that contract, so it's pretty much mostly VIX, and it's about 5.2 million contracts. That's down 37.7%. So pretty much however you slice it, November, not a rock'em sock'em robots month here for overall options volume. Let's see if it was rock'em sock'em today, though, as we keep on rolling into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Let's do it. Let's get weird. Let's get wild. Let's get whimsical. Let's get into the odd block. We profile 3 names that came across our Eye of Sauron every show and see what's going on out there. Kick things off with a name many of you might have heard of. This is Etsy. They of the crafty persuasion out there. Make your arts and crafts. They sell them over there on Etsy. Ticker symbol, of course, Etsy, ETSY. This one trading today about 40.75, off about almost $1.50, right around 3 1/3%. Let's see. Over the course of the past year, it's kind of been a bit of an interesting one. A year ago, it was trading 55, so well higher than where it is right now. Then it sold off in the great nadir of Christmas Eve, down to 43, so still north of where it is right now. Then over the course of the next month or so, by February, it had rallied up to 71, almost 72. So a good couple of months there for Etsy. And it kind of hovered in that range for a while, kind of vacillated in the high 60s to low 70s. Looks like it sold off again a little bit down to about 57 in May. Then it kind of rebounded by June. It was trading up in the low 70s again. So it kind of stayed around that level for a while, and it seems like they got their wings clipped in early August. August 1st, they were trading $68. And then by the next session, or a couple sessions later, but actually by the second, they were trading 59. And then down to, by the 5th, they were trading 53. So they sold off pretty hard. Obviously, earnings in early August, not exactly their friends. And they kind of stayed at that level for a while. Then looks like they got their wings clipped again in October 25th. They were trading 58. And then they sold off. Within a session, they were down to 44. And now they're back down to where they find themselves now, here at about 40 or so and change. A 52-week low, actually a little bit shy of the 40 handle, 39.76. So we're right about there, around the lower end of the 52-week range is where we find ourselves now. Let's see what our Eye of Sauron discovered. I'm going to go out on a limb and say probably maybe some put action. Let's see. Yep, that's exactly what we saw It was the D's 36 halves, so near term, but decently out of the money puts here, going up for 31.5 cents. Maybe some splits going on up there. This is not quite mid-market, but pretty close. I guess it's leaning towards a bit if you have to parse it. It was about 25 cents at 40 when these puts went up. Over on the Amex floor, getting a lot of floor prints coming across of late, which is kind of interesting. There are no earnings in this cycle. The next earnings announcement is late February, so this is not an earnings play. So Mr. Rock Lobster, excuse me, I apologize. I'm so used to doing this segment with the Rock Lobster. Mr. Meatball, it appears that we have what looks like maybe a bit of a line in the sand being drawn with some Etsy puts. Again, the execution's kind of mid, so you can maybe intuit that a little bit, but it seems like it's leaning that way. And this line in the sand, I wouldn't really call it terribly aggressive. 36.5 is about $3 below the 52-week low. So if they are drawing that line in the sand, they're not that excited about buying it where it is right now, but buying it at that level may be more intriguing. Is that your take as well, Mr. Meatball? I think they're drawing a little line in the sand here, getting crafty. And also, are you a big Etsy fan, sir? Are you and your wife out there slinging any Etsy crafts?
Yeah, Lauren, my wife actually uses it a lot. I like these I like Etsy a lot. Lauren uses it a lot on Big Blonde Hair or on kind of her own stuff. Here's what I'll tell you with Etsy. The amount of money that people are going to make on Etsy producing Baby Yoda gear is going to be off.
That and Cafe Press. Disney missed the mark not having those ready to go. They would be flying off the shelves right now.
The Baby Yoda stuff is it has gone insane.
Spoilers for The Mandalorian, by the way, if you haven't seen it. Listen.
Yes. So I think, like, Lauren and I were actually just talking this morning. I want Baby Yoda pajamas for all of the kids and me and her for Christmas morning. And I'm like, where am I going to get something like that? It's going to have to come from Etsy, right? There's you know what? Actually, the one thing I did see is there's a Baby Yoda Christmas sweater. And under it says, "What child is this?" Which I think is hilarious. But anyway, so Baby Yoda is going to be, that in of itself. But yeah, I'm a big proponent of Etsy. I like these put sales. It's probably an income play. But again, they're willing to take delivery there. Makes total sense to me. If you like the stock, about, call it 1%, a little bit less than 1% of the value of the underlying, but not that long to expiration. So not a terrible sale. And again, they should raise their guidance based on Baby Yoda.
This is why I like having you on, sir, because I hadn't even thought of the Baby Yoda angle, but you're right. That is going to be huge. And I thought the same thing once I saw there was none of. I would have a Baby Yoda in the studio now if it was available. They just don't exist.
Yeah.
So yeah, that's definitely in the annals of cuteness. This is the debate we're having. Maybe listeners, you guys can debate this yourself. Maybe we'll put up a Twitter poll. Question for you, Mr. Meatball, as a devoted fan of '80s films: cuter little kind of dude, Baby Yoda or Gizmo?
Ooh.
They're both in that same kind of Mogwai vein.
Oh, wow. I don't know.
That's a tough one. I don't know. We've been debating that here internally. I'll let you mull it over as I kick it off to our next one. Then I will demand an answer from you before our next name. Our next name, though. Listeners, what do you think? Baby Yoda or Gizmo? That might be a good little Twitter poll to put out there. Meanwhile, let's go on next to our next name. If that was too rich for your blood, $36.50, we got you covered with our next name. This is Barclays, ticker symbol BCS. They of many famous and infamous financial products ilk out there. Trading right now $8.80, so $8.80. Listeners, up about a dime or so, a little over 1, about 1.25%. This name has kind of had an interesting range. A year ago it was about $1 shy of where it is right now. Then it rallied up to, right around, about almost $9 in early February, which is pretty much right where it is right now, $8.92. Kind of hovered there for a few months, then it sold off down to $7.50 again in May. Kind of hovered there for a few months, then in July, it looks like they got their wings clipped a little bit. Went from about almost $8 down to $6.59, and hovered there for a while. Then they kind of rallied again in September up to almost $8 again, and then they kind of rallied again in late October, over $8 to back where they are right now. So we're on the upper end of that 52-week range. They're having erased all their losses, gained over $2 from their nadir of about $6.50 back there in August. So let's see what's going on out here. What did our Eye of Sauron deliver here? For Barclays, ticker symbol BCS, of course, listeners. It was, some puts. Puts yet again. We got a bit of a theme here going in the odd block. It was the Feb 9 puts going up 7,500 times for 68 cents. These things were 55 cents at 70 going out when this trade went up. This is opening. By the way, I shouldn't have to say that. Everything pretty much we talk about is opening. If it's a roll or something else like that, we'll pretty much allude to that, listeners. This went up on the Philly. Worth noting, this was crossed. So bear that in mind as you're thinking about this. Someone took the other side, whether that was the firm, whether that was another customer out there. We don't know. That information, unfortunately, is not provided to us. But keep that in mind as you're thinking about this. Worth noting, more did go up after this. So someone clearly liked this trade. Maybe the person who took the other side of it decided I want more. Either way, total of 10,500 of these total have gone up on the day. So another about 3,000 going up after this print. Mr. Meatball, first off, where do you fall on the hotly debated Gizmo versus Baby Yoda? And then B, what do you think about these Barclays puts? Think someone is getting a little hedge on? Actually, an in-the-money hedge, a meaty hedge, all the way out to February.
Well, one, I can confirm that the staff at Big Blonde Hair, the is pro Baby Yoda, and
is there any recency bias in that?
And not as excited by Gizmo. I even showed her the picture of Gizmo with his Rambo costume on, and that didn't do it. So I'm going to say that it astoundingly was and emphatically was they're Baby Yoda fans here.
Wow. Okay. All right.
And yeah, this is an interesting one because they're in the money. So is it simply someone who's trying to get short? Is the borrow going to go up a lot on this name? Is there some sort of, this was only in September a $6.50 stock. Does it have a trip back to the 200-day moving average, which is below 8 or lower? You gotta wonder on that whether there's some sort of real risk around Barclays, because that is opening and in the money. That is strange, to say the least.
Yeah, it's a weird strike selection, meaty, in the money, opening. It was crossed. More went up, so maybe someone liked what they saw after it got shopped around and took down more on the other side. We don't know. But still, interesting stuff going on this 9 strike. Someone said, hey, I'll sell you some 9 puts. I don't mind doing that. It is a weird one, meaty in the money puts. Tell you what, this kind of one, when they ring that weird bell to us, we're going to come back to these bad boys. We're going to see what's going on out here in Barclays, see how our friend here fares. Let us know, listen, what you think. What's going on here? What do you think about, do you agree? Is it clearly Baby Yoda? Or is there more room in your heart for other cute animatronic / puppet characters here in your life? As we round out the odd block here right now, another newcomer, which we always like to see some new names popping up here on the old odd block. This one is Cincinnati Bell Inc. No, they don't make bells. That would be cool. They're not a foundry. This is a regional telecom for the Cincinnati area. Ticker symbol CBB. Trading today, so if that was too rich for your blood, $8-9, don't worry, we got you covered too. This one trading today, $6.83, up about 14 cents, or about a little over 2%. This one over the course of the past year, let's see, a year ago they were trading much higher than they are right now. They're trading $11.30. So clearly the trend has not been their friend this year. They sold off almost instantly. So the great nadir, they were actually trading lower on Christmas Eve. They were trading lower than they are right now. They're trading $6.66, and they rebounded almost instantly back up to $9. And by February, again, they were trading almost 11 again. So they had pretty much erased all their losses by February, and they held that level for a while until about April. Then looks like the worm turned for them then and started trending down. By late April, they were trading $8.50, and by August, they sold off much lower than they are, and they got down to $3.19 actually. So this has been all over the place, this name, over the course of the past year. And then they hit their nadir around August 5th or so, it seems like, of $3.19. And then they rebounded again to the upside, up to about $7.20 or so by September 11th. In the course of the month, they pretty much doubled. So a lot's been going on, and you think it would be an otherwise sleepy regional telecom name, but not so much. This one's kind of been all over the map. This chart is reminiscent of a funky, cheapy biotech here, or something along those lines with the degree of movement. So let's see what our Eye of Sauron delivered in this surprisingly active CBB name. We got puts. So it's 3 for 3 here on the put side of the fence. The Feb 7.5 puts going up for $1.05, 4,500 times. Over there on the ISE opening, which of course ISE part of the NASDAQ empire now, one of their 6 options exchanges over there. But still opening over there and looking like, let's see, about, $1.05. So right off the bit, about a nickel off the bit. So it seems like they're drawing a line in the sand. Once again, Mr. Meatball, this appears to be similar to what we were just talking about. A fairly aggressive line in the sand if that is the case, because these are meaty puts. They're about 70 cents in the money. So they're going, once again, out to Feb. It looks like a bit of a theme here. Out to Feb, drawing a line in the sand with fairly meaty puts here. In fact, if these weren't completely unrelated sectors, I might think those two trades were related, but they are not. I would be surprised to see a Barclays Cincinnati Bell trade, but weirder things have happened. But still, similar methodology, similar time frame, similar strike selection. What do you think about these Cincinnati Bell line in the sand puts, Mr. Meatball?
You know, maybe there is a. I was looking to see if there was maybe like some sort of dividend, kind of play there. This is another one where, they're in the money. And these traded not just today, but they traded yesterday too. They're gonna. I think these are both opening. You're gonna have like 10,000 of these that are in the money, and this is another one. Just because it's a different trade doesn't mean it's not the same trader. So this could be some sort of play on vol, on a move in Cincinnati Bell back to, the sub 4s, which is where it was in October. So, and implied volatility relatively low. So, maybe this is not a sector thing. It's a these names are going to have trouble type of thing. Maybe it's a credit thing. That's the other thing. Maybe they're bond related. That's possible. These are weird. They're weird, wild stuff.
Weird, wild stuff. Yeah, there's no surface correlation between these two, but you're right. There could be some lingering behind-the-scenes correlation. That certainly, the paper is eerily similar. So that means we're going to put the old CBB puts in the to-be-watched category as well. Don't have to go that far to do it because they'll be expiring around the same time. So we'll be talking about both of these, I think, very shortly in the near future. Maybe we'll see. These are so meaty. Maybe there'll be some interesting developments that can go on. Speaking of interesting developments, it's Thursday. It's time for you guys to take the reins, see what interesting developments you have for us. It is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, let's get to it. See what you folks have on the brain. First up, this is kind of an interesting question, a thought question. This comes from Nicholas Sezowicz. If I'm butchering that, I'll just go by your handle. How about that? Euro20. There we go. I won't butcher that one for you. He wants to know, if you could only trade 2 to 3 non-correlated option strategies, what would they be? And what time frame would they be in? If you're not sure and need to resort to back testing for an accurate answer, please just give us a guess. We love you. We love you no matter what. Well, thank you for the unconditional love there, Euro20, and everyone else who's been hitting us up with love over this Thanksgiving. Mark Brandt saying, thank you, Option Insider Radio. Well, you're welcome. We love you guys right back out there as well. But this was an interesting kind of thought question. And it got me thinking, because if you think of your top 5 or top 3 favorite strategies, I can name a couple off the top of my head very easily, but he adds that extra wrinkle of non-correlated. And I started thinking about, well, a lot of I do actually technically is kind of correlated. So that's where I kind of started to run into some obstacles in my brain of 3 non-correlated type trades, which is kind of interesting. So I'm still mulling over my answer, which means I'm going to use my hosting power and toss it to one of you guys while I consider mulling. I'll kick you off, though. I'm one of the ones I definitely like and do utilize a lot across a wide variety of underlyings. I've said it before on the show many times. I love myself a nice bullish risk reversal, whether you do it with the put spread or just the put, whether you're using it to get, long, or whether you use it to get a credit or not, however you set it up. I'm a fan of that structure in general. Time frame wise, I don't go out that far with those. It definitely would be within 3 months. I would say probably in the 1, maybe 2 month time frame at the most. I don't go out very far for obvious reasons. And sometimes I like to play with that structure a little bit too. Maybe make the short leg a little bit shorter, the longer leg a little bit longer, obviously for theta reasons as well. So we can play with that a little bit. So I will throw that out there. But then getting the non-correlated addendums to those is where things get kind of interesting. Let's start, Uncle Mike, let's start with you, sir. What do you have to say for our friend Euro20 here wants your top 3 non-core. Excuse me, I got a bit of a cold kick in here again. See, I said the kids keep you sick no matter what this time of year. If you can only trade 2 to 3 non-correlated option strategies, what time frame? What would they be, and what time frame would they be in? I love our listeners; they go deep.
They really do. So this reminds me of a question Peyton Manning, the quarterback, was once asked. Do you ever feel limited because you're not a dual threat? And dual threat, of course, meaning a quarterback can run and pass. And Peyton Manning just kind of smiled and said, I am a dual threat. I can throw the ball to the left and I can throw the ball to the right. So for me, this question's kind of like something non-correlated. So to me, something non-correlated means slightly bullish, bullish, and really bullish. Those are the 3 types of correlations that I typically go for.
I like it.
Or cash. So that's kind of the 4th one. But I think that in general, it's a hard question to answer because I think that you need to have all strategies and that you're not going, I think it's foolish to limit yourself to just doing one strategy because as you've even said in the past, Mark, if you were to just do a risk reversal, you're limiting yourself because sometimes you do it with a put spread. Sometimes you do it. You might throw on some short call premium with it to boot, or maybe add a call spread if you feel you need to get some theta going and lose some deltas. It's really hard to say. So I think step 1, from a knowledge standpoint, know and understand every strategy. Me personally, I seldom, if ever, do a butterfly, but I understand it very well, and I think I've done one butterfly this year. So what the thing that you need to really have a good understanding of is what can you do that matches within what your sentiment actually is. So step 1, I think you need to determine what your sentiment is. And then step 2, what's the most risk-efficient way of doing it? Typically, if I had non-correlated strategies of what I wanted to do, I'd really have a hard time with it because I've been long premium, I've been short premium. The main thing with me is that I'm always bullish in some way, and when I'm cautious, I typically go to cash, and that's my style of trading. So I would say that if I can't do more than 3 strategies, I'm not going to trade.
Well, there you go. Yeah, you're right. It does get kind of dicey when you start looking at some of the secondary, tertiary. I like your idea, cash. There we go, cash. That's I'm in cash, which is kind of fun. Mr. Song of Ice and Fire, I'm sure you get maybe you don't. This is kind of more of a thought question. Maybe you don't get these on the active trader hotline over there. But what do you have to say here for our listener who wants your 2 to 3 non-correlated option strategies, your go-to, sir?
Yeah, I'm going to have to actually agree is that, whenever you're putting on any of these option strategies, limiting yourself just to one of them because each one of them carries kind of their own risk and reward. I firmly believe, one of my core beliefs is that, look, you got this toolbox, make sure we're grabbing the right tool for the right job. So it's all going to be based on what my outlook is and what I'm trying to accomplish. If I'm doing a pure volatility play, whether it's, I want to get long volatility, short volatility, there are products that are strategies that are better suited for that. Things like, straddles or even in some cases, if you don't like the amount of risk that you're taking on something like a butterfly or an iron condor, if that's well suited for, instead of like a short, selling the straddle, I can sell the iron condor, and it gives me that defined risk. So it suits me better in that situation. And those can be a play on time decay and a play on volatility changes. And that is not necessarily correlated to something like playing just outright, whether I'm just selling puts from bullish or just outright buying calls or puts. I know that's not the shiny answer on that, but that gives you more of a raw directional play, which is not necessarily correlated and separate from the volatility and time play. But some of the things that come along with it, you have other risks with that. Volatility changes, and obviously if volatility decreases, that helps your iron condor. It's going to hurt your call or put purchases. So when you add them all together, you're trying to do non-correlated option strategies, the risks of one are the advantages of the other. So you want to make sure you put in the context of why you're putting these trades on and what you're trying to accomplish. Because you'll see that a lot of times the advantages of one can be a disadvantage to the other. I know that's not exactly that they're answering. And in terms of time frame, it's going to depend on the type of trade I'm doing. If it's trying to collect that premium and I don't have necessarily a particular event or time frame I'm looking for, maybe I will take advantage of that accelerated time to get in that 30 to 60-day window. So I know that's not an exact answer, but I think it's a very interesting question. Only having a minute or two to kind of collect my thoughts, that's kind of what I was able to put together. And I would say that whenever you're trading options, I think in the area of just making it more based on what you're trying to accomplish with your trades will answer which strategies are best suited for that.
Yeah, time frame, I don't really do a ton of very long term. So I get the longest term I get. Some of the stuff is, maybe some of that downside vol stuff out there in products like VXX and others that tends to lend itself to a little bit longer term time horizon. So that might fall into that. So maybe I'm trying to think of what would fall outside of that, sub 3 month window where I usually hang my hat. But there's a lot of different facets, a lot of moving parts to this. Mr. Meatball, sir, first off, why are you inescapable to me today? My screen's kicking me your article from the street. You're just scrolling by my screen talking to Angela. I can't escape the meatball today for whatever reason while I'm trying to host a show. And then B, what do you have to say here for our listener who wants your top 2 to 3 non-correlated option strategies?
My top 2 to 3 non-correlated option strategies. Well, what I would say is that the way to make non-correlated strategies is to buy and sell things and not just sell. If you want to do something, the three trades that I would do is sell put spreads in names that you think aren't going to go down, sell call spreads in names that you think aren't going to go up, and then I'd buy straddles and things I think are going to move. And you put those three together, and you now have a non-correlated portfolio. And that is, we call that the option pit method of portfolio building, because that is kind of how we teach our guys to work, is to build a portfolio using, selling and then finding strategic places to buy straddles, buy strangles, buy options that are underpriced. Because at any given time, about 20% to 30% of the market's too cheap, 50% is too expensive, and 20 to 30% is fairly valued. So the key to the whole thing is don't buy or sell the fairly valued thing. And most of the names you've heard of and you like to trade usually are fair valued, unfortunately. So you got to spend a little time thinking of in that respect. The other way to develop an uncorrelated portfolio is to have some VIX strategies that you trade against some of your other trading approaches, and that's how you can do that.
There you go, Mr. Euro 2.0. 4 different takes, 4 different hot takes, quick takes on a question that probably needs a little bit more time, but we got to keep on rolling. Thanks for everyone writing in. We'll get to more of you on next shows, we promise. As we keep on rolling to our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, welcome to Around the Block. Obviously, like I mentioned at the top of the show, we do have OPEC unfolding as we speak. We'll get into that in a little bit more on TWIFO in about half an hour. We do still have some earnings popping off this week. It's not all quiet on the earnings front here with Salesforce. That was on Tuesday. Campbell's Soup was and Five Below yesterday. TD Ameritrade, Dollar General, Kroger's today. Big Lots going up there tomorrow. So a lot of names popping off. Still a lot to watch. Let's go back to the Song of Ice and Fire, sir. What is on your radar for the rest of the week?
So it's still focused around that trade deal. I mean, that's still lingering out there. I guess there's some kind of impeachment thing going on. Also, it's going to be interesting to see what comes out tomorrow morning with the employment situation. I know that the ADP report wasn't so filled with sunshine and rainbows. So it'll be interesting to see how that comes out tomorrow morning. I'm still really monitoring gold. Gold's kind of at this interesting level where it just seems to be hanging around. So I'm going to be continuing to kind of monitor that. And also kind of the spot VIX compared to some further out VIX futures. Kind of monitoring that premium that's going on there. So those are the things I'm going to be monitoring moving forward.
And Mr. Uncle Mike, same question for you, sir. What is on your radar for the rest of the week? Have you lost him from his undisclosed location? Uncle Mike, sir, are you there? He just got disconnected. Let's go to Mr. Meatball. Mr. Meatball, sir, what are you watching for the rest of the week, sir?
We got non-farm payrolls tomorrow. We got the FOMC next week. We have the trade deal next week. In the next, next week and a half. We do have earnings coming up in Ulta Cosmetics after the bell, which I think are going to be very important. We have earnings next week in Costco, and Dollar General reported this morning, I believe, or maybe tomorrow morning. But yeah, we do have a few earnings still floating around, but primarily I'm paying attention to non-farm payrolls and interest rates and trade.
And of course, the ongoing debate, Baby Yoda versus Gizmo. Look for that coming on our Twitter feed shortly after the shows here today. But that music, unfortunately, listeners, needs to come to the end, at least of this journey. If you're saying you need more, don't worry. We got you covered. We'll be back here in exactly half an hour to talk a lot more fun stuff on the options and volatility side. But before we go, let's go back around the horn, check in with everybody, see what they have cooking. Let's see if we got him back one last time. Mr. Uncle Mike, sir, are you there? And then B, if you are indeed there or from your undisclosed location, and folks want to reach out to you, maybe they want to talk to you about the non-correlated option strategies or whatever floats their boat, where should they go? What should they do?
By all means, go to stcharleswealth.com. Be more than happy to talk with anybody about non-correlated or correlated strategies. It's becoming the end of the year, so there are a lot of decisions to be made in terms of which stocks to keep, which stocks to sell for tax purposes. If you need have any questions on that, feel free to give me a call as well. stcharleswealth.com.
stcharleswealth.com. Click on the Fox for fabulous prizes. Someday, hopefully, that will actually happen. And, of course, Mr. Meatball, sir, if folks want to keep up with you and check out maybe they missed your cyber deals and Black Friday deals, but they want to check out what you got cooking over there in the land of the pit. A, what do you have for them? And B, where should they go to learn more?
Yeah, you know what? Go to our site. I put out video and blog content almost every day. And we've got lots of good stuff. Just sign up for our email list, and you'll get to see every beautiful thing that we do. Leave us if you got a question specifically for me, you can leave it on YouTube, or you can email us, or you can put it on Drip. Just go to optionpit.com and check and register for that email list if you want to see what we do.
There you go, optionpit.com. Sign up for the email, subscribe to them on the old YouTubes, follow them on the old Twitters at OptionPit and at OptionVol, all the other fun stuff they do over there. And last but not least, Mr. Song of Ice and Fire, if they want to call you up with such detailed questions as we just discussed, where should they go? What should they do, sir?
Yeah, so they could always go to our website, fidelity.com/options, take a look at all the analytical tools that are available to, as well as the educational sources that are available within our learning center, as well as our online classes that we teach. At any point in time, if you would like to have a one-on-one, whether running something by us like non-correlated option strategies, you can always give us a call and ask to speak with the trading strategy desk. We're here to run those by us, and we're here to help you out in any way that we can. You can even ask for me. I'm here to help you out.
There you go. Fidelity.com/options is the place to go to begin that journey. And once you click the tires and light the fires over there, you too can call up and ask for the Song of Ice and Fire or the Last Emperor or any of the other guys over there, the Last Data Krypton, all the fun crew over there in the active trader strategy desk, and bend their ear for hours in between these shows. Take advantage of that. But you got to go first, fidelity.com/options. Tell them you heard about them from us. They would like to hear that. And it's always fun stuff. And on behalf of the Song of Ice and Fire and the Meatball and Uncle Mike and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in such great questions. We could do a whole question palooza. I think we did some recently, not too long ago on the show for Thanksgiving. Maybe we'll do more for the holidays. You guys love that. So keep those questions coming. And if you're saying, hey, I need more in my life right now, well, we got you covered in about half an hour. We'll be talking TWIFO. If you're listening live, if you're listening after the fact, just hit next on your player of choice. Although that means you will miss all the fun stuff we're going to put in there in the live stream in between. Maybe a little bit of some strategy, some OPR stuff coming your way. Stay tuned for that, and then we'll be back again in half an hour to do a deep dive into all things crew, what's going on in that marketplace, and everything else, futures options. But until then, of course, then we'll be back tomorrow. Volatility Views, 1 p.m. Central, 2 p.m. Eastern. I'm going on the old times. It used to be noon. Now it's 1 p.m. And, of course, we're back here on Monday, noon Central, for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.